Glad to have a lot of people dialing in here for the last one before we go into the holiday period. So really thrilled to have James with us today. He's the Chief Operations and Program Officer at the Global Alliance for Banking on Values. And I think we have quite a few members working in the finance industry, a lot of others who are not. So really excited to learn a bit more about the organization and about what they're trying to achieve. So I know a lot of people on here will have questions for James, so I want to leave plenty of time for that. But James, maybe you could kick off with providing us just a bit of an overview in your words of the Global Alliance for Banking on Values. You know, why did this start? What's the primary objective of the organization? And I know you maybe wanted to try out an audience poll as well.
Sure. Thank you very much, Rhiannon, and thanks, Andrea. And it's a real pleasure to be able to talk to you. So thanks very much for the invitation. Before I talk about the GABV, maybe just very briefly a little bit about myself, so you know who's sort of on the screen. So I, as Rhiannon said, work in the Global Alliance for Banking on Values. Prior to that, I worked for nearly 20 years in Triodos Bank in the UK for about half that time, and for the last sort of 9 years or so in the Netherlands in the head office, primarily in sort of communications roles, but just before I left, the last couple of years were really focused on assessing impact and building some tooling within Triodos in order to assess and report on impact, including around carbon accounting, which I may touch on a little bit later. But before I then talk a little bit more about the GABV, I did just want to share a poll just to get a sense of the group. And so I just wanted to share these questions with you just to get a sense of whether you work in sustainability and finance. Is that many of you, or just in sustainability, or in neither? Okay.
Can you read it out?
Yeah, so the questions, but is it not on your screen?
No, it just that
Okay, so what the question was, which of the following most closely reflects your current role? I work in sustainability and finance. I work in sustainability but not in finance, or I work in neither of those two. And I can see many of you do have access, but perhaps not all of you. So maybe if I end and share the results, and you can see that there is, at least according to this, the majority of you are both in sustainability and finance, and one of you in neither, and a couple in sustainability but not in finance. It's useful to just kind of orientate a little bit. And then I did want to just ask a little bit about what you know about the GABV to get a sense, and there's absolutely no expectation that you know a lot or a little or nothing. And the question is, which of the following most closely reflects your position? I know nothing about the GABV, I know a bit, or I know a lot. Great, someone, at least one person knows nothing. That is always good. So we can share. And again, I hope you can see those results there to get a sense that some of you know a little bit. I know Els and Andrea know a fair bit. I know Els knows quite a lot, and that's great. Thank you. That just really helps get a sense of where you all are. So what I propose I do, I don't want to take too long with this, but I just want to share a couple of slides about the GABV, which give you a kind of an indication of really who we are as an organization. I should say personally before I start that I've only actually been working with the GABV since April of this year, but I moved to the Netherlands with my very young family at that point, partly in order to work within Triodos Bank on the development of the GABV in its early years. Sorry, has someone got a question, or are you? No, okay.
Just a reminder to mute if you're not talking.
Yeah, thanks, Andrea. So I spent the first sort of 4 or 5 years of my time in the Netherlands working with Triodos Bank, working part-time with the GABV as it sort of developed. And I've maintained a connection with the GABV ever since, because I think it is a really extraordinary organization. And I hope to share why that is, why I have that view with you today. So who we are, at its sort of heart, and certainly when it began, the GABV was really a CEO network. So it really brings together the people leading the most progressive values-based banks in the world. That's very simply what it is. It started in 2009. It was launched at Triodos Bank. I can say a little bit more about its.
Hello, I'm in a meeting, but I'm just.
It was very much founded in partnership with a group of other people, not by one institution. There are now 64 members around the world, plus 16 supporting partners. So supporting partners can be, they can be NGOs, they can be academic institutions, they can be development banks like FMO in the Netherlands, but they're all organizations that have a strong interest in the sustainable banking or values-based banking movement. And there are some numbers there to just tell you a little bit about the scale of the work that we do. So there's over 200 billion US dollars in sort of combined assets across the whole organization. I'll say a little bit more about the size and the sort of diversity of size of our members, and there is a lot of diversity. And the whole idea is that these are real leaders in the field. So these are organizations in their markets that are really progressing values-based banking. I mentioned the global reach. It genuinely is global. We are fairly unrepresented, I would say, in Africa, and that is an area of particular focus. There's been some really rapid growth over the last sort of 3 or 4 years. But growth is not an end in itself. So as an organization, we are very keen to maintain a group of genuinely leading values-based banks, not just to expand for our own sake. The type of organizations within the GABV really differ. So there are retail banks, credit unions, MFIs, there are SME banks. You've already seen they're in very different parts of the world and working at different scales. And as you can see, the largest has 8,000 co-workers, the smallest has 16. So there really is an enormous breadth. Obviously, some of those institutions are working in very large markets, some in much smaller markets. And the values of the organization, this really is core to understanding what makes a values-based bank a values-based bank, is that social and environmental impact are really core and key to the organization. So these are not banks that have, say, an active CSR department and are doing a little bit on the side to promote their sort of sustainability credentials. These are really institutions that have an integrated model, that really have social and environmental concerns really integrated at the core of the business. Partly as a result of that, they're very much focused on the real economy rather than the financial economy. And there is a substantial difference in the research we've done around the proportion of the activity that is really about financing the real economy. They're about long-term client relationships. So they really depend on understanding the people and the organizations that these institutions are lending to or investing in, and really building long-term open relationships. They're financially resilient. I can talk a little bit more about that, but I think in a sense, there's a big advantage if you're a values-based bank, because you don't want to drive down your capital to increase your profit. You are able to have an approach to financial resilience that looks at the long term and that isn't dependent on a very singular focus on profit. And the fact that profit is not the only thing and not the key thing for these institutions is very important. And we can talk a little bit about that later if you like. Transparency is absolutely critical for these organizations. a lot of banks, a lot of the members of the GABV when they started, and I can speak to Triodos Bank a little bit because of my experience there, but were all about trying to communicate to the wider world how banks do make the money that they make, who they do finance. So as a customer or a broader stakeholder, you can really see how and who the organization is financing. And that is really critical to their work. And all of these values above are grounded in the culture of the bank. That means that, as I mentioned before, this is not peripheral. This is really at the heart of these organizations. Now, as well as being very much a CEO-based organization, and we have an annual meeting, we've just been through a whole season of what we call chapter meetings, which are held regionally in the Asia Pacific region, in North America, in Latin America, in Africa, and in Europe. We also have what are called communities of practice. So people working at various levels within our member banks can come together to discuss topics that are really relevant to them. That includes metrics and really understanding how you assess and communicate impact, communications and marketing, how you promote values-based banking, and human development critically. So we bring together directors of human resources from lots of the different banks to discuss some of the issues that they face that are in a way or literally specific to values-based banks. So for instance, it might be that if you are involved in some parts of the banking business, you do not offer inflated sort of salaries. So your salaries might be low relative to the market. So how do you recruit and maintain or retain high quality people in those sorts of functions? That's a kind of issue that some of these people are working with. So it becomes very tangible. It becomes really grounded in the actual work that is taking place. Plus, we have a number of different initiatives, and I'd love to talk about one or two of these later, but they include a leadership academy, which is really an opportunity for development for talented people from the various institutions in our network, a scorecard which assesses the impact of values-based banks, and any bank actually. It's a way of determining how sustainable an institution is. That's used by some of our members to actually make those kinds of judgments when they are looking at potential investments. And actually should say the Partnership for Carbon Accounting Financials, which is a global initiative and a global methodology to assess the carbon footprint of a financial institution's loans and investments. And given as you probably have seen, there's a lot of banks making big announcements about being climate neutral by 2050 or 2060. This is very much part of the kind of banking world now that banks are saying, you know, we have to make sure that our business is carbon neutral in the future. And obviously being able to understand what your footprint is, set targets and drive the business in that direction becomes very important. And we're very involved in advocacy. So we work again with partners to try and influence regulations and to try and have a voice for values-based banking in discussions about regulations that affect the banking industry more broadly. Okay, I will stop there because I didn't want to go into that in enormous detail, but I hope that gives you a sort of broad sense of where we are as an organization.
Yeah, thank you for that. That's a great introduction, and I'd love to pick up on some of the things you touched on there. Maybe just to start with the launch of this organization, the timing is quite interesting, being in 2009. Was this at all related to the financial crisis? Did that maybe influence the ability or the momentum to push for change? Or do you think that kind of view on banks not necessarily being the first word that pops into our heads when we think of sustainable or values, has that skepticism maybe created resistance instead?
That's a great question, Rhian. So the honest answer is the timing was not related to the financial crisis, but the timing of the financial crisis was very important to the initial development of the network. So the timing in a sort of in a very odd way, was very important because it showed how relevant this was. There was a lot of attention on the banking industry because of all of the things that had gone wrong. And this was a network essentially saying things don't have to be like that. They can be very different. And we have a track record demonstrating what being different actually means. The roots of the organization were really in the work of three key individuals and institutions, I would say, in the very early days. And that includes a bank which sadly is no longer around, called Shore Bank, which was based in Chicago in the US, really amazing institution that was focused on providing mortgages for excluded communities in parts of Chicago that were redlined. That meant that there were lines literally drawn on a map of the city, and banks said, right, we just don't do mortgages in these areas because they can't be trusted, more or less. And Shore Bank said that is unacceptable and really went in and financed mortgages in those places. And there's a woman called Mary Houghton who is still involved with the network, although retired from Shore Bank, who was a really key early participant in setting up the GABV, alongside a really extraordinary man called Fazil Abed, who sadly died a few months ago, but who created BRAC Bank and the BRAC NGO in Bangladesh, which is a really extraordinary organization that perhaps more than any other of the members of the GABV works at scale in Bangladesh and now further afield in providing financial services for disadvantaged groups, for introducing widespread sort of health and education opportunities for large numbers of people in Bangladesh. And the third sort of part of this kind of triumvirate was Peter Blom, the CEO of Triodos Bank. And I think all three of them had always had a sense that values-based banking or sustainable banking was never about one country. So they had a focus in individual countries, and in Shore Bank's case, in a city. But they always recognized that sustainability is very much an interconnected thing. The impact of environmental change has social implications that impact on people sometimes in other countries. And so for them, this was always about a movement. And in essence, they very simply realized that they could do much more to promote positive change by working together than they could do alone. So even in a country like the Netherlands, where Triodos Bank is a relatively, well, it's actually recognized as a medium-sized bank, it's quite a well-known brand, it still doesn't have the impact of some much larger brands in the country. So by partnering, there was a real sense that much more could be achieved. The timing was not linked to the crisis. There was a lot of work going on prior to that. But as I say, when the organization was then launched in 2009, it was actually in the Triodos Bank building, not too far away from where I am now. There was a lot of attention, a lot of interest, and a small group of 10 financial institutions were the real sort of co-founders at that point.
And we have some people asking in the chat, actually, if you have more color on what happened to Shore Bank and why that didn't work out.
Yeah, well, they were caught up in the crisis, and they were kind of too small to save, to be honest. So I think there was a very strong argument that of all the financial institutions that were being bailed out and being kept alive and kept going, then an organization, an institution like Shore Bank should have been near the top of the list, precisely because of what it was doing, because of its track record and what it was trying to achieve. So it was actually in practice taken over by another institution in North America, which had a not so strong a kind of values-based sort of approach, but that allowed it to maintain some of its activities, but it stopped actually functioning as Shore Bank. And I think, you know, you can also take, if you step back and you look at the work of many institutions and organizations over time, they, you know, they had their time. They did deliver an enormous amount of positive change for communities in Chicago in particular. They were a real beacon and example for others of what is possible. And then their story kind of moved on. But that was really why they were really caught up in the financial crisis.
And in terms of when you see a lot of great progress happening with some of these smaller banks, do you think this is a model that can work for some of the mega banks? And have you seen that type of improvement over the last decade since this has began in the sector more broadly?
Yeah, yeah, it's a great question. It's difficult to answer because I'm not in one of those larger banks, but I do know people who are. I think it's absolutely fair to say that there are some very good people working in very large banks trying to change them, to move them in more sustainable directions. I think the whole kind of zeitgeist around, particularly the climate emergency, has had a real impact on the behavior of these different organizations. You can still, I think, look at, I mean, this information is out there. There are reports which tell you which banks are providing most finance for fossil fuel industries, for instance. And you can see whether those same institutions are making claims of doing a lot to combat the climate emergency, and you can make up your own mind about that. I mean, what I would say is I've had some personal experience through the work that I described around carbon accounting with larger banks, where there is really a genuine effort to move in a more sustainable direction. So the Partnership for Carbon Accounting Financials, maybe just to briefly talk about that, that was founded by a group of Dutch financial institutions led by ASN Bank in the Netherlands, but with ABN AMRO, with some with non-banks. There was a pension fund, asset managers. There's now an insurance firm involved. And they said at the time of the Paris Climate Conference that there was a need to, if the financial industry was to play its part in aligning with the Paris Climate Conference, so basically to say, which had said we need to keep temperatures well below 2 degrees, 2-degree increase from pre-industrial levels. They said, well, if that's going to happen, we need to know what our footprint is in order to take action to reduce it, to drive towards that that target of what is now really 1.5 degrees to stay within safe levels. So they committed within 2 years to create a credible open source methodology that any financial institution could use. Triodos Bank was part of that group. That's how I'm sort of familiar with it. And I was in that working group. And they did that. To cut a long story short, there was a lot of effort and they created a methodology. Not long after that was announced in 2017, the following year, a chapter of PCAF was created in North America. And it was, excuse me, it was created because a group of banks there felt that this was very important, but they also realized there were some asset classes that were not covered, like vehicle finance. So they developed the methodology further. And then critically, the Global Alliance for Banking on Values made a climate change commitment at its annual meeting in 2019 at the beginning of the year. And at that time, 28 banks, it's now over 30 banks, said, we are committed within 3 years to start carbon accounting for the impact of our loans and investments, not our own operations. And we will start reporting on that carbon footprint. That was crucial because that showed that this was relevant globally. And since then, the whole methodology has been developed into a global standard, and it has been picked up and used right across the world. So then there are now banks like Citibank, Bank of America, Morgan Stanley, RBS, Barclays, large institutions that have all committed to start using the methodology. Their combined assets are 18 trillion US dollars. So you can start to see that there is this kind of systemic influence and systemic change. And to go back to your question, Rianne, about what evidence is there of actual change in the broader banking sector, I would say that does provide at least one reason to be cheerful. If you really sort of see that those things are happening, it doesn't mean that the work has been done, because all the PCAF methodology is accounting. So it's really just saying this is what the footprint is, but it's an essential prerequisite for then taking steps to create products and services that encourage a lower footprint, to really start taking action. And it's a way of then monitoring whether that action is being effective at driving towards Paris. So it's a long answer to a short and very good question. I think there is evidence of real change, but I think there is a very important role for civil society, for the voluntary sector, to keep pressure on financial institutions to really deliver on the promises that they are making, because there are a lot of them. And if those promises are fulfilled, it will be, would be really impressive, and we will be going very much in the right direction.
And in terms of kind of thinking about addressing the climate challenges from a banking perspective, obviously having this system to measure the impact is so important, but do you see discussion around just full stop the financing of a sector like fossil fuels, or how to facilitate a transition process there, and what the role of different banks should be in that?
Yeah, I think, again, it's an absolutely critical sort of question. I think it is absolutely essential that people stop doing the wrong things as well as start doing the right things. And as I said, there is, it's not a secret. You can very easily find data on which financial institutions are still financing a lot of fossil fuels. I think what is particularly relevant is which financial institutions are starting to finance more fossil fuels, for example. But there are examples of big institutions that have come out of some areas, so especially coal, and there are commitments for different financial institutions to stop financing some other fossil fuel industries. And there are genuine efforts, I think, from some banks and larger banks, which I am not part of, and so I'm not an expert in, but to finance large companies that are genuinely transitioning. So when you get to those much bigger organizations, you can start to really work with them as a financial institution to support the transition at a very, very low level in terms of scale relative to that. When we did our carbon accounting in Triodos Bank, we recognized that in some sectors like agriculture, which has by definition a relatively large footprint, albeit in organic agriculture, which Triodos Bank finances a lower footprint. But actually, if you really analyze your loan book, the top, in Triodos Bank's case, top sort of 20 customers were responsible for over 50% of the carbon footprint. Mm. So you can be very targeted about working with individual companies to see how they might be able to reduce their footprint. Especially for clients of an institution like Triodos Bank, they're interested in having that conversation very often. They're already thinking about those things. I spoke to a relationship manager in the UK who said, well, when I had this conversation with a client that had a relatively high footprint, they told me that they were already getting the same questions from a supermarket that they supplied. So the banks are not always acting independently. There's pressure coming from all sorts of different stakeholder groups to start doing the right things.
And climate is obviously one of the key issues for the industry to tackle, but another that gets talked about quite a lot in banking is around compensation. And you touched upon this earlier in your opening comments, but could you talk a bit about what appropriate compensation looks like for a values-based or sustainable banking system?
Yeah, I think the whole approach to compensation is as with everything else, a values-based approach kind of reflects everything an organization does, everything a values-based bank does, including compensation, but also governance, products and services, the whole thing. It will vary between different countries and in different markets. So there isn't a sort of one size fits all. But what you will generally see, and what you certainly see in values-based banks in Europe, is a relatively flat structure. So that people at the very top of the organizations have a relatively low compensation relative to other CEOs or directors of conventional banks or traditional banks. And then at other levels in the organization, there is more parity with the market. And certainly for an institution like Triodos Bank, Triodos publishes details of the difference between the highest and the lowest paid. And if you look at a lot of other banks and a lot of other industries, you'll see there's an enormous breadth, whereas in Triodos Bank, it was between 1 and 10. And there's also an absence of bonuses. Again, this is, and I can speak much more to Triodos, and Els and Andrea on the call, also very familiar with this, but there is a deliberate decision not to incentivize co-workers with bonuses, which can encourage people to take short-term decisions when they should be taking long-term decisions, and to reflect the fact that what is done, and I strongly believe and have seen this to be the case, when an organization achieves things, it's because of a collective effort in nearly every case. So what Triodos Bank did, just as an example, is in some years, and not in all, there would be a small sort of additional reward of, it could be 300 euros or 500 euros that went to everyone in the organization, from the receptionist to the director of business banking, but excluding the executive board at the very top of the organization, because they're the ones that make the decision about giving that money. So there's a sort of governance reason why that happens. So I think that gives you a sort of sense, but I would, to be very clear, that it doesn't mean that because that's the case in Triodos, that is also the case in a microfinance institution in Latin America or another institution even in another part of Europe. But the principle is that there is a sort of fair and relatively flat compensation structure.
Yeah. So something quite different than what probably in mainstream banks is being implemented. I wanted to pick up on a question in the chat as well from someone about, you mentioned around the importance of collective action in achieving some of these objectives, and the description that GABV is part of a network of different purpose-led banks. Do you foresee teaming up with different kinds of value-oriented networks in asset management or in the pension community, or kind of challenges that you might face in keeping the focus intact if you're also grouping up with some of these other organizations?
Yeah, I think there's a couple of things to say about partnerships. So yes, and there are other networks that we do work with where there is a clear shared goal. Carbon accounting is just one, but that is very much beyond just banks. So yes, where there is an opportunity to do that, where there is a clear goal and a clear shared view of what that goal is and how we can contribute collectively, then absolutely. So we can't do everything. The GABV as an organization punches, in my view, way above its weight, because as a secretariat, it's very small, but it's able to do a lot because it has a license to do it because of its members. But we have to be sort of focused and deliberate about those partnerships and what we do. Within the network itself, partnerships are absolutely at the heart of our work. So in the last couple of months, for instance, one institution has come to us and said, well, we want to do some syndicated lending. So basically, they want to lend to projects which are too large for them to lend to alone. And rather than partnering with a traditional bank, they would prefer to partner with a bank or banks from within the GABV network. So that is a really kind of, it's a values-based banking effort. And that's exactly the sort of work that we do. Also, just in a more of a sort of micro way in terms of partnerships, there have been examples where senior teams, so the executive board of one bank has gone literally physically to visit and spend a few days with the executive board of another bank in another country, been very open and shared their strategic challenges, their strategic goals, and have reciprocally hosted that same organization back. And that kind of interaction and that kind of partnering can be hugely influential for an organization.
Yeah, and in terms of that sort of knowledge sharing and training at the CEO level, I know is a lot of the focus of what you're doing. I think for people on the call, there might be some interest in learning a bit more about the Leadership Academy and how that program works. If you could touch on that, and
Sure.
people that might be interested, how they can consider getting involved.
Yeah, absolutely, with pleasure. So the Leadership Academy, just to recap, is a course that is run in partnership with MIT in the US to develop for its personal and professional development training with a very diverse group of often sort of younger but talented emerging leaders in members of the GABV, but not only members of the GABV. So that's predominantly who the group is, but there are opportunities for people to participate in that meeting as well. We just did a very successful course with around 30 participants from all over the world. It was delivered virtually for the first time, and the next Leadership Academy, which is likely to start in sort of February of next year, we hope to do something similar. So it probably will be virtual wholly or largely, which also reduces costs, which is excellent. And if you're interested in it, please get in touch with me afterwards, because I would love to put you in touch with the people who are organizing that course. We're also this year creating an alumni group. So we're setting up a website and some activities, again, hosted by MIT for people who've been on the course before. Many of them are still in their banks, but some have moved on to other places and are having a positive impact there. But we really see an opportunity to kind of maintain that connection.
And maybe just a related question before going to some of the questions from the chat, and please, if people have them, put them into the chat and we'll try and get to them. But around this idea of a lot of people involved in net impact are either young or mid-career professionals trying to be change agents within our own organizations and industry, maybe reflecting on your career and kind of advice and what keeps you going when you feel overwhelmed perhaps by the scale of the challenges that you're trying to tackle, particularly in a sector like banking.
Yeah, it's a really interesting and it's a nice question. I mean, in my experience, and from seeing others sort of be effective and enjoy and flourish in this kind of environment, I think in the end, it's about being authentic. It's about being sort of true to yourself and where you feel you can make the biggest contribution and what will be fulfilling for you. So I think there are heroes working in traditional banks. Really, maybe it's smaller change, but it has a very large sort of impact. In a way, it's more comfortable to be working in a values-based bank surrounded by others who are like-minded. That doesn't mean it's always, that there's no disagreements or no challenge. That is absolutely not the case. But in a sense, I think you just have to really recognize where it is you are and where you feel you can make the biggest difference. In terms of I mean, I found from being involved in values-based banking, being involved in sort of NGOs and other organizations, values-based, which is all I've really done in my career. It's you are just so fortunate to be surrounded by inspiring people and inspiring organizations all the time. And you don't have to work that hard to be exposed to that. Although I would say, as a practical bit of advice, and that was certainly my experience in Triodos, I think you should volunteer and put your hand up if you want to be involved in different areas of work. So when I was younger, I made a deliberate point within Triodos of saying I'm really interested in international work. That's where my passion was. I'd worked in a development NGO in the UK, and I was very interested in that area. I don't think if I hadn't put my hand up in that way that I would be in the role that I'm in now, which I love being in. So I think you have to be proactive. In terms of being kind of maintaining that inspiration and not being overwhelmed with things, maybe an example that springs to mind, I mentioned that we'd had a sort of season of chapter meetings in different regions of the world. One of them was in North America. And so this is a group of CEOs, there's around 15 of them who come together, and they were talking about various issues. One of them they wanted to talk about was racial reconciliation after the murder of George Floyd. And one of them, a guy called Brian Argett, who is CEO of a bank called City First, explained how City First have recently, it's in the public domain, merged with another bank called Broadway Federal in LA to become the biggest Black-led bank in North America. And as an example of a really awful situation that has these kind of beacons of progress and change happening, and really kind of pragmatic, grounded change, I thought that was just a brilliant example of what is actually happening. And there are tons of these examples. And that for me is what makes me more sort of, makes me a pragmatic optimist, I guess, about the future.
Yeah, and do you see kind of these social issues that seem to be gaining more momentum? I think there's a lot of focus always on climate, and perhaps because there are more developed metrics for how to measure that. Do you think some of the momentum we've seen this year around the social issues will continue? And do you expect to see better metrics coming out around that going forward?
Yes, I do, partly because there are things like, certainly in Europe, the EU social taxonomy, which is a kind of lightning rod for some of those things. So there's a bit of carrot and stick. There'll be things that people have to do, and we as the GABV want to influence that conversation. I do think it is harder than climate change, in the sense that the climate emergency has this very clear kind of goal, which the Paris Agreement describes. So everyone more or less agrees that we have to stay well below 2 degrees from an increase in temperature from pre-industrial levels, and really at 1.5 degrees as far as possible. There isn't quite the same specificity around social change. So some of you probably know Kate Raworth's donut economic model, which is this whole notion of a social floor and an economic ceiling, an environmental ceiling rather. The environmental ceiling is a little bit easier to get your head around and to sort of drive towards than the social floor. But I do think there is an opportunity to do much more there, and we are very interested in playing a part there. And within values-based banks, and I think within sustainability, I think the Sustainable Development Goals also reflect this, is this very clear recognition that these issues are connected and very closely connected, and you can't just look at environment on its own or social change on its own. They're so closely interconnected that you have to address them together.
Great, and maybe just as we wrap up here, I think we're approaching the hour. If you could just finish up with thinking about looking ahead for the organization, what are some of the goals and top priorities that you have looking to the next kind of intermediate and longer term?
Yeah, Well, for us as a network, there are sort of three key things that we want to do. We want to expand, strengthen, and lead. Expansion, not for its own sake, as I mentioned, and I think at a slower rate than in the past, but especially in regions where we're underrepresented, where there is a need, like in Africa. We would like to grow our membership in those sorts of places. We want to strengthen our member banks. That's always been at the core of the network. So we want to, in a sense, equip values-based banks so they can make more impact. And we want to lead in the sense of really making the most of our combined voice. So in some senses, that might be, in some cases, that might be advocacy work. And in others, it might be much more pragmatic programs, of which PCAF is an example. But it's interesting you mentioned sort of the social side. We are looking at whether we can develop a kind of PCAF equivalent, but in the social, with the social dimension in mind. So those are the kind of three key areas that we want to focus on in the future.
Great. Well, it's been so wonderful having you on. I think a lot of people in Net Impact are working in this area, so we'll take a lot of points away from this. If it would be all right with you, particularly if people have questions around maybe the Leadership Academy or ways that their organization could get involved in this, maybe we can have them follow up with us and connect them, because I think there will be a lot of interest after this.
Please do. We would love that. We would really, especially on the Leadership Academy, we're proactively looking for people to participate. So yeah, that would be great. Please do, and please feel free to get in touch on any of the things that we've discussed today.
Great. Well, thank you again, James, so much for your time, and everybody for joining, and have a wonderful holiday, as this is the last one before the new year.
It's a pleasure. Thank you very much, everyone. It was a real pleasure to talk to you.
Hey, thanks, James, and thanks, everyone.
Thanks. Have a nice weekend.
Cheers, everyone. Take care.
Yeah, thank you. Thank you, Net Impact Amsterdam.